Hi everybody, Jeff Gibby here. Hope you're doing well. Thanks for coming out. Appreciate your logging in. We did have some issues with GoToWebinar, but they appear to be working, and hopefully you guys can all hear me. We're going to go ahead and get going, get underway. So let's go ahead and get to your favorite part. The demonstration today is designed to instruct you on using MetaStock and the accompanying add-ons. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Okay, thanks for coming. Logan's an interesting character to introduce. Logan used to work right with us here at MetaStock. He started in support. He then moved on into inside sales a little bit later. I actually pranked Logan with my favorite office prank ever, but that's a little bit of a different story. He's actually managing a bit of a fund right now, maybe like a hedge fund, some private equity. Not sure what the real official definition for that is, but while I was here, he actually developed a lot of his algorithms into LCI. There's now an LCI version 2 that's out, and he's here to show it to you today. The LCI is a really cool application, made even cooler by the fact that it's just included with MetaStock as part of the package. So with that being said, Logan, do you want to tell everybody about this prank?
Well, for one, thanks for having me. So I'll tell everyone about the prank. I know we had some technical issues, so they're probably logging in. But so I used to sit basically right behind Jeff. It was a good thing that I didn't sit in front of him, or else I probably would have had more stuff done to me. But I was kind of out of his peripheral view. But I was in the process of moving, and Jeff had just moved back to the Salt Lake City area and had a bunch of boxes. And I asked him, I said, hey, I'm going to be moving. Can I borrow some of your boxes? And he brought them over. And I came into work that morning and looked at my cubicle space, and from the bottom to the ceiling was filled with nothing but boxes. And needless to say, it took me, I don't know, a good hour or more to get out of all of these boxes to get to my computer and get to everything. And then the best part is he went through and labeled the boxes already for me. So I had this moving crew that were moving these boxes that said like Logan's Playboy collection, or Logan's underwear don't touch. So he put a lot of funny labels on the boxes that everyone kind of asked me questions on, and it was definitely a good laugh. But by far the best prank I've seen, and that's just what it is with the MetaStock crew. They're just a great group to work with. Definitely some of the best years of my life so far was being able to work with each one of them and work with the MetaStock software, and is one of the large reasons why I decided to include everything that I built that I use for free, because I guess for a couple of reasons. One, I wanted to be able to give back what I had learned to MetaStock, but also two, I'm not in the business of necessarily selling stuff. I'm not trying to sell you this system, get you to buy it. Just hopefully what I can share with you guys is ultimately leads to success on your part. And what we're going to be going over today is we're going to be going over the updates that I've made to the original LCI system, and we just call it the LCI 2.0, which has some pretty significant changes. And a lot of the changes, they're not based off of the calculations, so to speak. Those are all the same, but the differences that you do see are meant to help take what I see in my mind and help you as traders really interpret what the signals are being given. So I had a lot of questions from traders that asked, what should my stop be at this point? Where should I be exiting the trade? What is my profit target? What should I be looking to do? So I really tried to incorporate my thinking, so to speak, which is more difficult than you think, and put it in a way that helps you guys interpret maybe what I would be seeing on the other end. Now, if you don't have this update's free. It just was released in the latest update of MetaStock 14. So if you're not seeing what I'm showing you today, the reason is you just need to update your MetaStock to the latest version. So that being said, let's go ahead and let's dig right in. Now, I'm not going to go through a boring PowerPoint presentation today. I personally learn better with kind of the real experience of what's actually going on as opposed to, you know, maybe cherry picking or going through some examples. Now we'll look at some better examples than others, but we'll really analyze a bunch of different markets. I have a bunch of different charts open, different types of symbols. We've got stocks, we've got Forex, we've got some futures, and then if there's additional symbols you guys want to see, we want to go over, then we'll go through that as well. Now, before we get started, let me just ask real quick, can you guys all see my screen? You should see the MetaStock software with the Power Console up. If you guys can all just, that are with me, give me a quick yes if we can see it, and we'll get going. Okay, great. Now, what we'll do is, and what I ask is, as I go through the presentation, as you guys have questions, go ahead and put the questions into the chat box. Now, what I will probably do, if there is a question that is directly related to what I'm talking about at that moment, so a clarifying question, let's say we're talking about some of the new updates, you have a question on that, please go ahead and post it. I'm here so that you can learn, and honestly, if you've got a question about something, chances are that everyone else does too. So don't be shy. Go ahead and put your questions in. If it's something that's not directly related, what I'm going to do is I'm going to wait until the end of the presentation, and we'll really have a good question and answer where you guys can go through. I'll also give you my contact details. You guys can email me directly also. Now, do I have anybody in the room with me that is not a current MetaStock user? That's maybe looking, or maybe they're on a current trial right now? Go ahead and put in the chat box if you are if you're on a trial or a new user. Okay. Okay, so there's a few of you. So for those of you that are maybe a little bit newer, I'm not going to go into a lot of the real specifics on the LCI. Reason being is I've got a lot of recorded videos that go over and cover that information already. So I would, after the presentation, I would recommend that you go and watch a lot of those recordings that I've already done. And then again, feel free to email me with any questions. And I tend to respond fairly quickly for those of you that have had an experience with emailing back and forth with me before. Now, a little bit about me. Jeff kind of gave a good intro already. These are only PowerPoints you'll slide. So this is me. The funny joke at MetaStocks, they say is in my picture I look like an Arby's manager. Well, I apologize that I look like an Arby's manager. But that way, if you guys always, you say I was listening to a webinar from a guy and they say, who was it? Oh, I don't know. It's the guy from MetaStock. They say he looks like an Arby's manager. Well, everyone will know that you're talking about me. So I can thank Jeff and also our other business partner, Hunter, for bringing that up. So, so Jeff kind of saying what I do. I manage personal investments for several individuals, okay, including myself. In the process of setting up a larger fund, but we're really getting a lot of our footing going in different markets. As you start to, one of the things that you'll really notice, you don't notice as an individual trader, but once you start getting to a point where you're trading larger size and larger accounts, you really have to view the market in a much different perspective. You know, you can't go in and just buy $1 million worth of shares on a stock that's $20. It just, you know, a lot of times it just doesn't work out. You have to wait a long time for it to get filled, et cetera, et cetera. So we're really starting to diverse and break ourselves out into different markets where all that volatility is. And so essentially I manage you know, private portfolios, including my own, and I've been doing it for over a year now. And a lot of it, or most of it, is based off of the LCI, and it's based off the stuff that I'm going to tell you today. Now, I'm not going to share anything with you today that you might not have heard if you're familiar with technical analysis. But I'm not going to go as to say it's as simple as a moving average, right? So there is some complexity to it, but there's complexity in the market, and you need to understand that going in. You need to trade simple, but trading isn't easy, if that makes sense. So simple doesn't equate to easy. So we'll kind of get in that today. Now, just for those of you that are new, I do a newsletter. You can go on the website. It's lcinvestmentanalytics.com. You can sign up for free if you want. Do I send out stuff very regularly? No. It's, maybe once a week, sometimes twice a week if we're feeling lucky. Sometimes it's several weeks. It just really kind of depends. But it's not a spam address. You're not going to get sales. There's nothing that I'm selling. It's just sometimes it's my take on the market, updates to LCI. I just came out with some ETF layouts for MetaStock that were free to download. So if you were a part of that newsletter, you would have gotten that list. So it's just kind of a way to keep in tune with stuff that I'm doing if you like the LCI and if you want to apply some of my techniques to what you're trading. And then also, if you guys don't have MetaStock, in the chat here, I'm going to go ahead and I'm going to put a trial. So if you're a new user, if you haven't gotten signed up yet, you can go ahead and get signed up. Now, everything I'm going to show you today, again, is included in MetaStock for free. There's no additional purchase. So you sign up for a 30-day trial of MetaStock, you get all the LCI stuff for free as well. So let's go ahead and let's dig into the software. Now, let's take a quick step back. So if you've joined me before, I go over this point, case in point, in every single webinar that I have. The reason why I do that is because I think it's extremely important for you to understand. Okay. Now, for those of you that joined me before in the chat, what are the 3 data components to technical analysis? And if you're annoyed that I've asked you this question before in a previous webinar, too bad, because I'll ask it again in the future. In the chat, go ahead and put in the chat. Price, volume, and time. Exactly. So we've got price, volume, and time. Now, in technical analysis, you'll have a lot of people that say, well, what about momentum? Well, what about changing into tick charts? Well, what about changing this and this and this and that? You break it down to its most simplistic form. If you want to understand what price is doing, look at price. If you want to understand what volume is doing, look at volume. If you want to look at time, look at time. Now, time has its hand in everything. Even if you tell me that your chart has nothing to do with time, maybe you're looking at a tick chart, but a tick chart is still a reflection of a time period, irregardless, because the market opens and closes within time frames. Even if it's a 24-hour market, you still have time sessions throughout the trading itself. So let's get into the software. Now, I've got several different charts open up here, so we can look at several different examples. I'm going to open up, let's go ahead and we'll close the Power Console, and we'll just look at the euro. Euro dollar, we've had a lot of action with the current market being unstable, everybody not knowing where it's going back east with Japan, with China, everyone trying to understand if the market is going to drop from here, if it's going to rebound, and if it's going to try to break new highs. Personally, I think that we've got some room to move to the downside. That's not a recommendation, but that's my personal thoughts. Okay. So if you're familiar with the LCI, let's dig into the LCI 2.0. If you're familiar with the LCI, when you first got that update, you had a lot of signals that looked like this. Let me check these. Okay. You had charts that looked like this. You had a lot of signals in there, and you had an expert commentary window. And the expert commentary would tell you if you clicked over a signal, okay, what the reversal behavior was, and what the reversal score was, and it gave you some indicator breakdowns, gave you your stop targets, your profit targets, etc. All of those based off of cycle movements of what's happening in the underlying instrument that you're looking at. Okay, so in the LCI 2.0, the first thing that you're going to notice is you're going to notice that the expert commentary was updated. Okay. Now, with this expert commentary update, what I did is I tried to make it easier for you guys to understand what each bit of information was. And that was starting with the LCI reversal score. Okay, now I had a lot of questions on the scoring. Well, if I have a high score, does that mean I'm in a bullish market? If I've got low scores on both, is it flat? You know, what does it mean? They were trying to understand. Okay, what the reversal score is it's the gauge or measurement of price behavior or trading behavior at a particular level of time and price. So if my level is 67.5, that's telling me that I have a higher interest of reversal buying, okay, at that particular time at the price level it's trading at that time. Okay, so if I'm looking at this current chart, now this is a 30-minute chart of the euro. Okay, I can see that I had a major bounce signal, okay, which means that prices came into this major support, which is this green line, okay, came into support, and then we had a lot of bullish activity, which causes us to acknowledge that there was a lot of buying pressure at that particular time. Okay, so looking at our score, now one of the new updates, if you look below, okay, if you look below, you're going to see when the last strong score was. Now, with the new gauge at the bottom, we can see that the last strong score, which is between 60 and 90, it occurred 44 bars ago for bearish, okay, and 0 bars ago for bullish, and that was based off of this bounce signal. Okay, so immediately I can see, okay, well, our last reversal that we had was several bars ago, okay, several hours, and I'm getting a bounce on the most recent strong signal. It gives us a more powerful signal to analyze. Okay. Now, what makes up this signal? If you're questioning on what makes up the signal, go watch some of the training videos that I've done on YouTube. It goes into it more specifically, but essentially it's looking at price, volume, Fibonacci retracements, you know, cycle movements, and then price action. So by price action, meaning candlestick patterns is what you would be familiar with it as. And as we move down into our trade management area, now this more or less stayed the same, but I added some additional clarifications. Okay, so with our entry management, it's still the same. We enter within 3 trading bars. And if we look at the entry price, I added this, and I had a lot of questions about gaps in price. Now this would be primarily if you were trading based off of a daily chart, you know, day to day, and having those overnight gaps. But what if I do if I have a gap? If you have a gap and you gap up above a confirmation, you should be entering. Okay, plain and simple. So it puts it in there. And then also too, individuals wanted to see what the point distance from the entry was. Okay, so they wanted to understand, well, okay, great, my entry stop is 1.161, that's where I should place my stop, but how far is that from my entry? On the opposite perspective, what is my profit target? How many points am I going to be making? So am I looking at 41 pips? Am I looking at 20 cents, etc.? So I added that in there as well to give you a better perspective on how much a move is, as opposed to just what the price levels should be looking. You should be looking for. This helps in understanding and setting up your money management, knowing, well, what is my proper risk to reward skewing? And let's kind of get in that. I'm going to update this here real quick on my commentary so that it's not refreshing on me. Okay. So on this particular trade, you can see that we had a 42 pip stop from our entry, which is based off of our signal. Okay, pips being Forex. If you're not familiar with what a pip is, don't worry about it. Okay, it's not important at this time. But what we want to look at is our initial target giving us at least a 1-to-1, if not better, ratio on our risk. Okay. So as we can see here, we can see that our risk versus our reward potential okay, is 1-to-1. I would say within a 1 pip is classified as a 1-to-1. Okay. Now, as we move to our primary target, we can see that it's 90 points. It's 90 points away from our entry. Okay, so as we've got at 90 points, now we're looking at a greater than a 2-to-1 ratio, and that primary target is what we're really looking for. And the way that this primary target is created is it looks at where the most likely variant of resistance essentially is going to be. Okay. Now, as we can see here, did we just hit our target based off that 90 points, which was at 1,293? If we look at this closing price high, our high point was 1,298. So we would have just hit our target based off of our primary structure. Okay, and you can see that we had a lot of resistance coming into play. Now, for those, I see some questions real quick here. Will we send it? Yes, this is recorded. Okay, and you guys can all review it back at a later time. Absolutely. Okay. So we can see that we hit our target. So by adding this, it gives you a better perspective rather than having to manually calculate where your entry values are versus your profit target values. And then as we scroll down, I changed the indicator analysis to fit a little bit better with price, volume, and time. Okay. And rather than telling you what indicator is doing what, I took those indicators that I use to gauge what time is doing, what price is doing, what volume is doing, and I put them in their perspective. So if we're looking at price, we can understand trend, and we can understand a expectation. Okay. If we look at volume, we can understand what volume cycles are doing and what the strength that the volume adds. We can look at time. So you can see here, price momentum indicates an increase in bullish momentum. Current price cycle is currently forming. Okay, and then as far as our movement, we don't have any concerning trend movement at the time that would go against what that signal is. Okay, so it's just basically the same information that you were getting previously, but it's given to you in a better way of understanding. Okay, is what it comes down to. Fibonacci values are the same, and then the trailing stop values. Now, I didn't make any updates to the trailing stop values, but I have had requests from you guys to get these updated to make them a little bit easier to understand, mostly on a real-time basis. And we'll do an update again here in the near future, which makes those a little bit easier to read as well. So as I've covered the expert commentary, are there any specific, do you guys have any specific questions before I break into the other aspects of the system on the commentary itself? Go ahead and type in your questions and we'll cover them. Again, if someone has, if you've got a question on something and someone else does, I can guarantee you that that more individuals do as well. And so don't hesitate to ask questions. Okay. The second part of the system is, what do SB and BK mean? Okay, that's a great question. So these are the signal types. Okay, so let's dig into, before we dig into that though, Bob, are there any questions on the commentary? So essentially with the scoring, okay, if you've got the scoring meter here, I guess you could say, and if you have so what it's trying to say, if you have a scoring value that's in the gray area, there's no signal trades. This one, it's a loud signal, and then this is a strong entry. So it just breaks up so you know what the score is telling you. How do you get the update if you already own MetaStock? Essentially, you just reinstall MetaStock, and it'll give you the new update. So you would go to the MetaStock website, you would log in and go to your My Downloads page, download MetaStock. Again, you'll have the update. That's for end of day. If you're utilizing MetaStock Pro, you'll go to your MetaStock Zenith, and you'll go to the Help About there where you have the add-ons, and it'll tell you that there's an update available. If you have trouble doing that, contact MetaStock support, and they'll help get you taken care of as far as getting it updated and having this available. So those are the updates and expert commentary. Again, just designed simply to make your life easier. Okay, so I've got a question here. What do you do if you have strong bullish and bearish signals? Okay, if you've got a strong bullish and bearish signal at the same time, this is extremely, extremely rare. Okay, it's extremely rare, and I've actually only seen it one time, which was on IBM, and it was because it was on a daily chart, and we were going into earnings, and price gapped. Okay, so we had a bounce signal, it gapped against itself, went down, but then also the following day of the gapped price was also a bounce signal. That's the only time I've ever seen it. In that potential case, the only time you're going to see that is if price gaps. In that way, you would want to be looking for your signal to be going with the gap. But if you're getting both of them, sit tight, kind of wait for a confirmation to see which the direction you want to go, if the gap's going to fill or if it's going to retrace. But that's a good question, but very, very rarely, if ever, are you going to see that. Like I said, I've only seen it once in 5-6 years of using the LCI. Another question, what for bearish score, the higher the better, same like the bull score? Yeah, exactly. Yeah, so the higher the bearish score indicates selling pressure on that particular bar with a corresponding support or resistance level. Now, is that a guaranteed? So if I've got a score of 90, does that guarantee me that prices are going to drop? No. And that's why I designed it so that it never goes below 10, it never goes above 90, because you never have 100% certainty in the market. Something can always change on a dime, and it doesn't make your analysis wrong. Okay. But yeah, the higher the score, the more price action is being added. Okay. Can I add a shortcut to a Google Translate in the next update? I don't know what that would really add. If you want to send me a specific email, Eric, contact me directly about that. You can give me some details as to why that would be. Okay. So let's dig into Bob's question. Let's look at the specific signals and, more importantly, the new highlights that were updated. Okay. Now, Bob asks, or was it Bob? Yeah. Bob asks, what do SB and BK mean? Okay. These are the signal types. Okay. So SB indicates, and if you want to, you can hover your mouse over the signal like this, and it says switch resistance bounce. So it's the type of signal. Hover my mouse over the BK, you're going to see in the tip window bearish breakout. Okay. MB is support major bounce. Okay, so you can hover over it. If you want additional information, you can go to help, MetaStock help, and you can go to what's new in MetaStock 14, Logan Connors trading system, Expert Advisor symbols, and these specific symbols are going to give you a detailed explanation of what each one means and what creates them. Okay, so there's a lot of available help menus that you can go through in MetaStock, as well as my YouTube channel where I've done all the training videos on the specific aspects of the system. Okay, so we've got our signal here. Now the next question was, well, how do I manage it? You know, when you're looking at bars like this, I kind of did it that way because I knew what I was looking for and I knew how I wanted to manage it, but I didn't really think to myself, well, how would someone else need to view this to help them manage a trade? And I incorporated the active trade highlights. So we're going to go to the Expert Advisor, Expert Properties, just hit cancel, it'll pop up, and we're going to click on the Highlights tab up at the top. Now, if you ever want to see a highlight or don't want to see a highlight, you can simply do it by just checking the boxes. Okay. Now, let's go over some of the highlights that I have. So you'll see up at the top we have our active trade overlaps. Now, what the active trade overlaps means is that there's two potential active trades going on at the same time. Okay, let's say, for example, we had a sell signal, price drops. We haven't gotten stopped out yet, but we've got a buy signal and it activates. Okay, that's kind of giving us an indication, okay, of some indecision within the market, and we'll look at some examples of that here in just a second. So we can look at our bull and bear bounce overlaps, meaning we've got a bearish bounce still, trade still active, and we've got a bullish bounce trade still active. We've also got our breakouts, our bull bounce bear breakout, and our bear bounce bull breakout. Sorry, it sounds like a mouthful, but essentially it's just you've got a bullish bounce signal and a bearish breakout overlapping and vice versa. Okay. We've got this one, which is our bull bounce and our bull breakout. Now this is a very cool signal, and it's a very powerful signal, and I'm going to show you some great examples of this. But this is, you know, when everyone talks about having a very high probability trade, this is one of them. Okay, and it's same with the bear bounce breakout. Essentially, you've got a bounce signal and a breakout signal working together, and a lot of times that is a clear indication that you've got a good opportunity to run to a farther profit target or your extended profit target. Now let's go to, and then you've got your standard active bounce trade. So if I want to see bullish bounce trades, so maybe if you're only going long, then feel free to only check that. We've got our breakout trades, and then if you want to introduce the candle colors, which I had before, you can do that. I personally am not going to check the candle colors because MetaStock, we know that a filled-in candle indicates that it's down, and an up candle indicates that, or excuse me, a hollow candle indicates that prices are up for the day. So we'll go ahead and we'll click OK, and you're going to kind of see this chart transform a little bit as far as what we're looking at. So I'll ask you guys, would you agree that now putting in the highlights, does it make it a little bit easier to kind of see what was going on now? So before we had buy and sell signals, but we didn't really see what was kind of happening after. You know, I'd love to get your comments. You know, feel free to put it in into the code if you feel that it does. And the best part about it is if you feel that it doesn't, you can just go and turn it off. Okay, but it's something that I gave to you to try to help. Again, my goal is to give you guys some tools that help me be successful, and I would hope that it would help you be successful in return. That's it. So if we're looking at our current signal, okay, let's go to our expert commentary again so we can understand what the trade was telling us. If I look at this bounce signal that happened most recently, I can see that I needed to break the high, which on the next bar, we can see here, we broke the high. You guys see that? This bar broke the high, okay, which was right here. More or less, you guys get the idea. So here's our high point that we've broke, okay, which is our entry point, which triggers the trade, and that's why this bar turns green. Okay, so now it's saying we had a bounce signal. The next bar, or within the next 3 bars, we broke the high, which is in our trade management rules. Okay, we've broken the high. That's our entry point. We should be long at that bar, and then it utilizes the trade management perspective. Now the current highlights don't use the profit targets within the coloring. Okay, they don't use the profit targets within the coloring. So if you're going to trade establishing yourself based off of the profit targets, now there are different market conditions at which you should use targets and use not. Okay, but that's a different webinar for a different time. So the trade management that you're going to see here is based off of trailing a position. Okay, it's based off of trailing the position and letting it run and trying to get out as much profit out of the trade as you can. Okay, so what it does is it follows the trade management of the LCI stops. Now I can make these a little bigger so you guys can see the dots. Okay, let me make these a little bigger for you guys. Okay, so you've got the dark blue and you've got the light blue. Now the coloring will be the same on your chart. If you want to change the color, if there's something that better suits, or if you don't like a black background, you like a green background or white, or you know, whatever suits you, please feel free to change it, okay? Make it fit what you're trying to do on your personal trading and what you're comfortable with. But as we can see, the trade then starts to trail. Now, there is a very important rule here that you guys need to write down. So if you're looking for something to write down, this is it, and I'll repeat it, okay? The trade, you want to wait for price to meet or exceed the initial target before trailing. Let me say that again. You want to wait for price to meet or exceed the initial profit target before trading, or before trailing, excuse me, before trailing. Now, why would we do that? Because when you have support and resistance-based signals, a lot of times you'll hit a signal and it'll kind of come down a little bit, it'll come back and it will return. It'll try to break that support or resistance again. And it'll try it again. You'll get multiple bounces. It'll move sideways and continue up. Sometimes you get explosive moves like this. You get mostly on intraday charts, but you get these explosive moves that come off of a very strong bounce. Okay, but the thing is when you hit these, I've found that when you get an explosive signal like this, you'll hit the first profit target within just a few bars of following. It doesn't take long. Okay, but if I get a good trade set up that I feel that support is going to hold and it kind of bounces around a little bit, I want to give it the opportunity to work in my favor. Okay? I want to give that trade an opportunity to work. Okay? So we wait for the initial target to be met, to be hit, okay? And then it starts trailing. Now we've definitely hit the initial target. We can see that we've trailed. Now the blue bars are the blue dots, excuse me, are our standard stop levels. And when we have more volatility that comes in where we might have a higher potential for prices to come against us, it puts in a lighter blue dot saying, hey, we've got a lot of volatility or maybe some indecision here. It might be good to tighten up the stop. Okay, make it a little bit tighter. And then as you can see, as the worry kind of goes out of the market, then the standard stop takes over again until we see another flat line. You can see how the prices have really kind of flattened out, and it's given us a tight stop again. It's saying, hey, you know what? Based off of price movement, based off volatility, we can see volatility here is very, very low. If you've joined me for a previous webinar before, you'll know that really low volume can indicates a lack of demand, and a lot of times you see that at resistance. It indicates a turning point, and you don't have demand driving the market higher. Once that picks in, then you'll see the sellers start to pick up and the down volume proceed. So our current stop, if we weren't going based off of our profit targets, if we were going based off of our trailing, we would currently be trailing at was that 126? 1268 would be where we would be trailing, and we would be seeing if we could run this further or be stopped out. So that's how the trade highlights are working. Okay, so it looks for our entry point. Okay, the same entry point that is being told in our expert commentary. Okay, once we've broken that entry point, we're active. So this is a bullish bounce, so it gives us a long trade. We're staying active, we're staying highlighted. We've hit the first profit target, now we're trailing, and this trade hasn't yet been stopped out. Okay, so that's an example of a long trade. Now let's look at an example of a short trade. Okay, now here's a short breakout trade that we had most recently. You can see that we broke out. Again, same entry management. Now, the breakout is a momentum-based signal, and I don't establish profit targets with my breakout trades. It has been asked, so maybe we'll look at figuring out a way to put them in. But a lot of times with that, you want to catch, when you have a breakout, if it's going to break out, it's going to run. And if it's not going to break out, it fails and it comes back. So you'll notice that your breakouts are going to have very small losses, and then you'll have a group of much larger winners is what you really look for with the breakout system. But with the breakout signal, you can see here we got short on the breakout, and it's highlighting it in purple bars. Okay. Now you can see this bar came up and hit my stop value. Okay, this did, but, or did it not? No, it did not. That's why we're stuck. So this almost made it to our stop, but didn't quite. Pulls down, and then we hit our initial target. Okay. Once we hit the initial target, we start trailing. Okay. So we can look at our initial stop. Again, we've got our entry. We've got our initial stop at 1311, 1311, which puts us right here. This is our stop. Okay. If we would have been trailing immediately, do you guys see how we would have come back and we would have hit the trail stop? Gotten us out a little premature? Because it's retesting that level that broke. But as we hit and as we trail, we can see that prices are then met and broken. Now, this is where yellow comes into play. Okay. We can see that we've got a yellow, or we've got a SB signal that happened while a breakout signal was active. Okay. Based off of our trading rules, we know that if we break the high within the next 3 bars, it's a signal to go long. And then what happens? Immediately we have a yellow bar. This signifies that, hey, we're still in a downtrend, but we've also broken the high of the recent buy signal and gives us a consolidation point. Okay? You're going to find that if you analyze these consolidation points, they give you great signals and opportunities to re-enter the market on breakouts. Okay? So you can see that if once we broke out of that yellow area, the market really took a dive to the downside and met our most recent support level. What type of signal do I like to look for? I like to look for what I call a clean signal, which comes out of some strong movement, but the bars are gray. Or in other words, there's no highlight. There's no current market bias based off of what my indicators tell me. And my indicators are basically my mind trying to be put into mathematical form. And then we get a bounce signal, and then we get our bar, and then we get our highlights. So you can see at this other one, this is something that I wouldn't necessarily be looking to take because of the yellow consolidation. Now, there have been times where I'll take a trade coming out of the yellow on this green bar, and at that point, this simply would have been a bar that I would have gotten stopped out on, a trade that I would have gotten stopped out on. But what you want to look for is you want to look for these clean trades. Again, you got no real bias. Obviously, it's to the downside. Okay, and then we get a strong signal to the upside. Okay, so I've got a question here. It says, in this example, SB as a switch bounce signal should be a stronger signal than MB, right? Why would SB be stronger? They've both got the same score, but an SB and an MB are given equal weight. There's no an SB versus an MB versus a PB is not each signal is stronger than the other. They're both generated differently. So in SB, you'll see a lot of SB signals in a trending market. So if you have something that's very much trending, okay, we can go back and we can look at some examples on like the Dow or the SPX. Okay, so you've got something that's got a lot of movement and it's just kind of constantly moving at that 45-degree angle. You'll see SBs. Now, what is an SB? It means a switch bounce. So that means that previous resistance is now acting as support. Okay? Previous resistance is acting now as support, okay, as opposed to a specific support level. So is one stronger than the other? No. What you want to gauge is you want to gauge the weighting, the reversal score, and apply your money management, which is your entry, what you're looking for on your profit targets, etc. And then you gauge it from there. Okay? That's how we want to gauge our management. So hopefully that answered your question. Now, however, are bounce signals and breakouts the same? No, I'd say bounce signals are more important to look at than breakouts. Okay. However, breakouts you're going to get a lot more. Breakouts are going to get a lot more potential false signals, but those false signals are going to be at smaller risk with greater risk to reward. So your risk to reward on a breakout is much larger, but your accuracy on them is going to be less. Okay. In short example, both bullish and bearish reversals are the same and are not in the allowed signals range. So why take the trade? Can you re-clarify, Michael? If you could reword your question for me, we'll get back to it. Okay. Let's go to a different chart, and we'll just look at some more of these same examples. Okay. I had a there. This one. Okay. This is the DJI. This is a daily chart. Okay. Oh, okay. So we were probably looking at a different bar. Let's go back to it real quick. If I put my mouse above the SB, okay, you can see that the score was actually 67.5. But you're correct. If the score was at 35, a signal wouldn't even show up. Okay. In the LCI, the score has to be at least 45 for a signal to even show up. So that's why this orange signal we can see in the commentary, it says allowed signal and trade score. So you shouldn't be seeing any signals with a scoring less than 45. And why did I go so low down to 45? Well, you can't always mathematically program what you want to see visually. You could literally have a score go from 65 to 45 based off of a couple shares of volume and a couple ticks in price, right? The smallest movements can make that change. So sometimes you have to apply some discretion. Okay? You have to apply some discretion. So that gives you a buffer, so to speak, on something that what you're really ultimately looking for is you're not looking for a signal that barely made it to 45. What we're looking at is we're looking at something that barely didn't make it to 65. Does that make sense, guys? So when you're looking at these lower signals in the between 45 and 60, you're looking at something that is just kind of right there. You know, it just missed the Fibonacci level. Okay? It just missed volume. Volume is still really high, but it's not highlighted. That's a good example right here. We can see that volume on this particular bounce signal, this bullish one, volume was still very high. It was very trendy, but we just barely had not enough volume to give us a bright red, as which I want to see on a normal signal. Now, is this dark red volume here the same as these dark red over here? No, absolutely not. Okay, so that's where you got to put that discretion in, but you don't want to look for an excuse to find a trade. Okay, don't look for an excuse to find a trade. Okay, all right. Let's look at this one. This is a good example. You're sure welcome, Ian. Take care. All right, so let's dig into this now. This is an example. Now, remember, I told you with the overlaps, we had a bullish bounce with a breakout, both active. Okay. Now, this is looking back just in October of last year when we had the drop in the Dow, and you can see how the Dow dropped, right? Pretty severely, but we can see we had that breakout signal coming into play. It broke. But it broke immediately down to resistance, or not resistance, excuse me, support. And we bounced. We bounced right off of it. And you're going to see this all the time. Okay? We get down to that support level, it bounces right up. We had an active signal. Now, this is where a good example, again, I want to see my primary target get hit before I trail. This is a perfect example. You can see how prices, they bounced really hard, and then it took them a minute to really gain momentum. And ultimately, we ended up having another really good couple of signals that took us off. But we can see here, if we analyze just this last signal, we can see that we were green. We were in an active trade from back over here, first bounce. And then we had an active breakout. Okay? Now look at the type of run we received when the bars were blue, when we had both signals working together. When you have both signals working together, it gives you a very powerful move in the market at a higher majority of the time. Now, is it always going to be like that? No. Okay, we can, more recently, if you look at the SPY, it kind of had a breakout and kind of fell flat. Okay, but if we look back historically, okay, you can see when you get these bounces, the breakouts, you have very violent, fast moves to the downside. See, here's one that we moved, but we just kind of trickled. Didn't really go anywhere. But you can see here we had a blue breakout. Okay, very violent move up. Okay, that's like a 200-point day. Okay, and then it carries on. So you can see that you have a lot of very strong moves. Okay, so I've got a question, Randy. He says, I don't get dot DJ. Is it DJI? So I have DIA up. Very surprised that the BK bar on DJI for the 05 wasn't a BK for DIA on that date. Reason being, Randy, is because when you're looking at an overall market, the specific index symbols are going to track the overnight hour movements. When you're looking at just an ETF, so the SPY, the DIA, etc., okay, they are only tracking the market movements during trading hours. So you're going to have differences in those signals. So if you are trading ETFs, and I recommend that you do, especially in a time like this where the market is so indecisive, okay, and one move in the market is going to control all of the stocks regardless of where they are, okay. Right now the stocks are moving as a whole. The stock market drops, all stocks drop. It goes up, they all move up. It's moving in sync right now, which can be dangerous. The way you can diversify that is moving over to ETFs and trade the market as a whole. Okay? But if you're going to be trading those ETFs that are over the benchmark indices like SPX and .DJI, I highly recommend that you have access to those symbols as well. And I would actually say that you use the index symbol that's looking at the 24-hour period with a heavier weighting than the one on the ETF, because the ETF is leaving out some of that information. Okay? Because as we know, the market doesn't really sleep, even though the after hours can be very slow. Right now, you've seen a lot of activity coming out of Europe. Okay? So the European sessions overnight with your futures and the indexes of mostly futures, which are controlling it, is having a lot of movement. So you're going to notice a lot of gaps, okay? A lot of fade gaps where price tends to fill what Europe did, etc. So something important to look at, but it's a good question. But you guys can kind of see that. You can see here we had that breakout signal, then we had a bounce signal, but we can see that right before we had this big drop, see the indication that it's giving us? It's saying, hey, we already broke out. We've got an active sell signal. Okay? And then we've got this bounce signal, and did it really go anywhere, and then it collapsed. So it tries to give you, when you're looking at overlaps, it tries to give you an opportunity to look at when the market is kind of indecisive. If we're getting sell and buy signals overlapping at the same time, it's not really necessarily a market that I want to be trading, or I need to look at trading it differently. And when we're getting these short moves, we need to look at a market where we're trading for smaller profit targets and maybe tightening our stop a little bit. Okay? But we need to look at it differently. It's basically saying we need to look at it differently We need to look at the market differently at that time. Okay. Now I know we're running short on time. Let's go ahead and let's. So do the highlights make sense? And they had low scores. Exactly. Yeah. If we want to look at the scores, we need to we want to understand what the scores say. That's right. Okay. Here's a breakout again. You can see how we get a breakout with a very small risk. Okay. This is gold. Okay. Now you would expect that gold, works the inverse of what the market does. Okay. You can see we had breakouts. We had kind of a small signal, a little bit larger signal, but then we had a very massive breakouts. So with these breakouts, again, they look for your risk to reward skewings. You're looking for these big runners. Give a little bit, a small loss for a potential of a much larger gain. Okay. Now, and I used a lot of examples here so that you guys can see that support and resistance is kind of what runs all of the markets. Okay. Now, does that mean that it's some gold standard? No. I mean, support and resistance is simply put is a point in time, historical time, where prices stopped and went the other way. So as prices get to that point where they stopped and went the other way, that's what the scoring does, is it tries to identify, okay, well, all right, are we going to kind of have that same reaction? Do we have a lot of selling pressure? Do we have buying pressure? And that's what we're trying to gauge. And then for those of you that are options traders, I trade options, as you guys know. When you get to reversal points, your premiums are going to be lower. If you trade reversal signals in the market, you're going to get better priced options. If you're trading breakouts, you're going to pay more money for options. Plain and simple. So if you're looking for the best type of option trade, delta, if you don't use the LCI, look at another reversal-based system if you're trading options, in my opinion. Okay? In my opinion. Because then you can get more for less. Okay. Here's crude and intraday on crude. Okay. Does it make sense what I said? The highlights. Okay. So let's open it up. We're kind of out of time here. I hope the information that I shared has been helpful to you guys. Let's go ahead and open it up for questions. Are there any questions? Things that I covered you guys want me to go back over? As far as the scans, they are the same. Now, there was kind of an annoying problem with the system tester in the previous LCI version. I've gone ahead and I've fixed that. So those are all updated, and it's utilizing a new DLL function, think MetaStock XIV, which helps give it a more accurate trade management. Can you look at the Goog chart? Are you talking about the Google GOOGL.O or GOOG.O? Which one, Randy? Okay, exactly. Okay, so here's an example, right? We've got a very, very, very strong downtrend, very strong down signal. We've also got a breakout, and we broke out of this major support. Okay, now as we look back, when we're looking at a signal like this, we can see that we kind of had a really major resistance point at one time here. That's, it was after a gap up. Google had a very tough time breaking out of that, and then it finally gapped up above with some earnings. But as the market as a whole right now, again, the market right now is moving as a whole. So if you look at it, you're going to see, you can open up almost any stock chart. I would go to bet that say 80% or better. Their price movements over the last 3 or 4 weeks are going to look very, very similar, if not almost identical to what the SPX has done, at least for the U.S. Okay, the only reason they would be different is if they had an earning event that happened at that time and caused them to either gap up or gap down because of a financial statement. Other than that, if there was nothing going, you're going to see them moving exactly, almost to the T of what the market is doing. Now, I am still very much bearish on this particular signal. in my personal opinion. This is something that I wouldn't be looking to go long on, just because of the current market conditions and because of how strong this downtrend is. I would assume that this is a slight pullback, and tomorrow you're going to see prices take off again back down to the downside. Okay. Another reason being I can see the lack of volume here coming in. Okay. So, all right. Any other questions, guys? And Randy, on those other symbols, so we'll look at one more, and then you feel free to shoot me an email with your other questions. Okay. And cover today's SPX. Yeah, we can go over that. Okay. Estee Lauder. I love Estee Lauder. I don't know if you guys have looked at my training videos, but that was a stock that I was watching at that particular time I was doing the training with the signal, and it ended up being a very good win. It was another example here of a great signal to the blue, which is a very dynamic, very powerful move to the upside. Very good run. Okay, so now we can see that we've got a with Estee Lauder, we've got a strong bullish breakout signal, but again, what is happening in the market right now? In the U.S. markets. Okay? And I apologize if you trade other markets outside the U.S. I focus, is it going to work on those markets? Absolutely. But do I have as much knowledge there? I don't. Unfortunately, I wish I did. Maybe someday I'll be able to break into those other markets and get familiar with their movements. But right now, based off of the current down movement, okay, so for one, you want to research this type of move, this big move, you want to see if that was caused by, you want to see if it was caused by some sort of earnings release. That's a pretty big move. So first check and see if what you've got there. As far as the bounce signals are concerned, we've got yellow, yellow, but look how close right here the low of this bounce signal is. Okay. Let's see here. Look at the low of this bounce signal, okay, in relation to where the stop is. Okay, you guys see that? Now there is a current update that we need to make with the stops, but it's not important now. But you can see here, see how close it is. So if you were setting up an entry to go short, you could literally set it up at the stop, okay, and you wouldn't be entering really any further away from your low as what you would normally enter in on. Does that make sense to you guys? So as I'm looking at that, I'm looking at a consolidation point. I know at a time of consolidation I can get a big move out of it. Do I really want to reverse the signal at the time? I need some confirmation. But if I've got a low that's basically sitting at my stop, okay, I got a low that's basically sitting at my stop, okay, you can go ahead and set an entry there and trade it as you normally would. And if you want to make a change to your risk management profile, then put it in so that if you're getting in maybe 5 cents lower than the low, then take 5 cents off of your stop and drop it down a little bit. Okay, let's go over the SPX real quick. Now again, if you guys have got, I guess I better type in the correct symbol. Now, if you guys are looking for specifics, you know, we can go over them. So, what happened on the SPX? Now, this was a very interesting signal to me. Okay, a very interesting signal. Reason being is that it was at a great bounce location, and we had some very large bounces. Okay, we were coming out of, though, an extremely strong breakout, and we did get stopped out here at the bottom. So the long trade is active, and then we had a breakout. Okay, Under current market conditions, okay, however, I saw this as a pullback. And I warned some of the other individuals that I talked to about it. I said, be cautious of this, okay? Because the current swirling panic, you know, a lot of people say don't pay attention to the news, and they're correct. But you know what? When you have a panic like this, and the market has been so extended that it hasn't moved anywhere since the beginning of 2015, you know, it's been over a year since we've made new highs almost. With these big drops and a failure to hit these new highs, I still retained my bearish momentum. Now, that's something, unfortunately, you can't program into a system. Okay? That's something you can't program into. I wish I could. Okay? Sometimes the best trade that you take is the one that you don't. I know that kind of, you know, we've all heard that kind of sounds cliche, but you know what? It's the truth. I was able to trade this breakout signal on the SPY, bring it down, okay, and then I entered several short positions again based off of this breakout here. Kind of came against me a little bit. I took a little bit of heat, but we're back in the green. But the one reason why I felt comfortable doing that is if you look at that chart and then look at the Dow, okay, and then you look at the Russell, and then you look at the ETFs associated with them, their signals were off from each other. So if we look at DIA, okay, they all had bounce signals, but they were very mixed. Okay, they were very mixed. And we look at SPY especially. Now, if you're looking for an index to follow for the US, I recommend you follow the SPY. Okay. So we had some mixed signals, okay, that were given. Now, you didn't have the breakout here. You had it on the SPX. Okay. You had the bounce signal. Now, if you weren't paying attention to the market dropping as a whole currently, okay, technically speaking, this signal here would have been a good setup. There would have been nothing wrong with taking this trade and then being wrong. Okay? You got to remember, you don't want to be too scared that you're going to be wrong for everything, because it's like Murphy's Law. You're going to wait for the perfect thing and it's still going to go wrong. Okay? Trading is not a game of absolute perfection. Okay? Not an absolute perfection. It's winning more than you lose. Okay? You're going to lose. If you keep your money management intact and make sure that your risk is the same no matter what, okay, then you're going to have those winners that make up for the losers. I can tell you there's been some trading systems that we've looked at on our automated programs that utilize some of the LCI breakouts and stuff like that, where they've been profitable, but they only have a hit rate of maybe 30% win rate. Okay, so it does matter on your money management. Now, does trade placement matter too? Yes. Okay, if someone tells you it doesn't, then sorry, don't listen to them. Okay, it does absolutely matter. Okay. All right. Now, any last questions before we wrap up here? Sorry, I've kind of gone on and on. If you guys want some help on some specific signals, now I don't really offer a service where I don't really offer anything where you know, I'm going to analyze your trades for you. Okay. What is it saying today? Okay, Mark, what I say it's saying today, as I say that it's having a pullback and that we're going to see the next couple of days be down, and we're going to test the low of this previous bar. My previous projections were that we were going to see lows hitting down close to 175 on the SPY. Okay, that's what I think. That's based off my interpretation. I think today was kind of a minor pullback off the bounce. I think we're going to see lower movement tomorrow, and if we break this low, I think that we're going to head down to at least 175 SPY, which is 1750 on the SPX. Okay, if you want to email me more on it, feel free to do so. Okay, now I'm not going to analyze all of your guys' trades. I simply just don't have time. I've got a lot of stuff going on, but I can definitely, I'm willing to help where I can. Now, if you want some more specific help, something I don't do, but I've had a lot of questions for this. I've had a lot of individuals ask me for this. which is doing like a one-on-one training session where I log into your computer. We go over specific things that you guys have. If you want to do something like that, feel free to send me an email and we can work on what the logistics of that would be. Okay? It's not something that I advertise, but if it's something that you want, email me directly and I can talk with you individually if it's something that can be worked out. Okay? Any last questions on the LCI 2.0? On the updates that were put in, or the LCI in general, while you guys have me? On the second ADS, it went yellow-eye. Randy, go ahead and shoot some of those over to me in an email, as far as all those specific trades. So, since we're running short on time, go ahead and send those over to me, and I'll get you a reply. Randy's a good guy. Okay. So just in finishing up, let me get you guys my contact details, just in case here. Again, as a reminder, you can go to my website, sign up for the webinar, or the mailer, and you can get those updates from me. Again, if you don't have MetaStock, I believe most of you do, but if you don't, here is a link that you can go register. I do also believe that some of the reps might still be available. You can give them a call and get signed up for a trial. Again, any LCI trial that you sign up for, or excuse me, any MetaStock trial you sign up for comes with the LCI. LCI is a free system within MetaStock. Everyone that uses MetaStock gets the LCI, as well as all the updates that I make. So the LCI 2.0 is free to you guys. I've also got a lot of free tools on my website as far as workspaces and stuff that you can download, play around with, change as your heart desires. Okay. Now here's my contact information as well as MetaStock. So if you don't have MetaStock, you want to give them a call real quick. There's their number. Get registered for a trial. Tell them you're just watching the LCI webinar, and they'll get you set up. If you want to email me, you can give me a quick email, and I'll try to reply obviously as best and as quick as I can. For those that have emailed me before, we've got several in here in the chart. They can attest and tell you that I'll get back to you, and I'll definitely here to try to help as best as I can on your trading journey. Having help is nice. I was in a situation at MetaStock where I had a lot of resources to me, which is something that individuals don't have. So whatever I can do to repay back that, I'm happy to do so. Okay. All right. So if there aren't any other questions, Jeff, I guess is there anything else that you wanted to leave us with?
Thanks, Logan. Thanks for coming, everybody.
Awesome. Yeah. Thank you, guys.
See you in the next one. Thanks, Logan.
Awesome. Thanks, Jeff, and thanks, you guys. Take care and best of luck trading.